So we are supposed to know them, these two. When we are reporting, we have to know that they have two things that we want to look into. One, the performance. Two, the health of the company. That's why we mostly talk about them, that we should know when we are talking about that. When we're talking about recurring earnings, we always think about sustainable earnings that we have already said about them. So when we're evaluating the recurring earnings, we use the discounting cash flows, DCF. You remember the analysis? DCF analysis. So that's what we use when we are looking into the two that we have said on the boards. Any questions before we go ahead? Operating and non-operating. Operating and non-operating. This is also part of the course outline. So it means we're doing several of them. What are operating and non-operating components in the financial statements or in the company? What are they? You know, these things are the same. They're the same that we're learning. Okay. Operating and non-operating, we're looking into the core business or core activities of the organization. Okay. So when we are talking about that, we're talking about the core operations of the business. Okay, that is what I have said. How about the non-operating? Non-operating then, Sam? Okay, but then maybe we should, okay, it's the opposite of that.
Not directly.
Mm-hmm.
Or operations.
Okay. So non-operating, it means they are the opposite of what we have already said. So that's why I was saying I don't know why the university wanted us to talk about them. Maybe just to understand that they are the same. Because when we're talking about operating, we're talking about that. How about what is the operating income? This I have to ask because you are accountants. Operating income.
Just the money that is there on the cloud being used illegally.
Okay.
Like it facilitates the whole activities that are
Mm-hmm.
ongoing.
So here they're saying operating income can also be known as operating profit, also be known as operating earnings. So this refers to the profit of the company, and that generates is generated from the core business activities. These include the revenues that we're talking about, and also minus the operating expenses that we talk about always when we're talking about profit and loss account. So we should not get surprised when the course outline talks about that. They are the same things that we talk about when we are saying about the operating earnings or profit or income. So then non-operating income, we can describe it as the non-operating income includes gains and losses from activities not relocated to the company's core business's operations. These are typically irregular and can significantly impact the overall financial performance, but do not reflect the company's core operations or health of the operation. So this is what we can talk about. Some things that we can think about them are interest income, earnings from investments such as interest on cash holdings or bonds. Okay, so these are some of the non-operating income. We are talking about examples like the interest on the cash holdings or bonds. The other components we can talk about profits or losses from investments in other companies or assets. We can invest from other companies, and those are some of the things that they are saying non-operating. Sale of assets, gain or losses. These can be some of the non-operating profits that we have already said in these other teaching that we had before. So they are saying gains and losses from the sale of property, equipment, or other non-core activities. These are also non-operating profits. One-time items. These can be, let's say, legal settlements, insurance claims, or asset write-downs. So these are some of the non-operating activities or income. So comparison of operating and non-operating. When evaluating a company's performance, focusing on operating income provides insight into the company's core business efficiency and profitability. So we're talking about the two. Efficiency and profitability. So now maybe we can understand why the university told us that we should learn about them, because we should understand exactly what are their uses in the presentation of financial statement. They are there, for example, the operating and versus the non-operating for efficiency and profitability. Then, when comparing them, we can use the operating margin, is it? Operating margin, comparing operating margins to industry peers, to sister industries, where we can look into them for efficiency and effectiveness. if we are looking into the sister companies when we are comparing operating and the non-operating. So sometimes we can also add efficiency and the effectiveness. But here, when you are comparing peer companies, sister companies, okay? So we also have continuing operations again. Should we say them again? Continuing operations? Yes. Sustainable continuing operations refer to segment of the company's business that are expected to remain part of the company's in the foreseeable future. Okay. So continuing operations continuing operations. So we're saying continuing operations are referred to the segments of the company's business that are expected to remain part of the company in the foreseeable future. So we're still looking into continuous activities that are going to be there. Looking refers to the company's segments of the company. Segments. Of the companies. Of the company's business that are expected to remain part of the companies, part of the companies in the foreseeable future. In the future. So these are continuing operations of the company. What can be this? Continuing operations? contents that are in the profit and loss account, revenue, isn't it? Yes, these are the continuing operations because they are the ones that we want to see whether we're making profit out of them. So they are for the core businesses, because you cannot think about continuing operations that are not core, that are once off. So the revenue, the expenses that are there in the profit and loss account are the ones that are continuing. Now we go to discontinuing operations. Discontinuing operations. You go and call Benj. Yeah. So we can say these refer to business segments or activities. All activities that the company has disposed of. Has disposed of. Okay. Has disposed of, or plans to dispose, or the plans, we can say companies has disposed of. These can be plans, e.g. plans, plans that were there, that they say we are not going to continue. I remember it was Dorothy or Augustus talked about a certain project to say we are not continuing with it. Yes, so those are discontinuing operations of a company. We can also talk about, where's the paper? Mind you, we start at 12 o'clock. Oh. Yes, we're leaving at 2, as usual. Okay. Because I was afraid to say maybe you don't remember. Yes, I know you have already had your lunch and now it's digestive system working on you. So please remember. Anaiwala tulaba. Because so we are also talking about the discontinuing operations that are which are no longer part of the company's ongoing, which are no longer with the company. Company's ongoing operations. Ongoing operations. So these are reported separately to avoid distorting the financial results from the continuing operations. Have we heard now why we are knowing them? They should be reported separately. These should be reported separately. Why should we report them separately? Because we don't want them, we are avoiding distorting the financial results. To avoid the financial results.
What distorting?
Yes, distorting the financial results from the continuing operations. Where can this be? In the financial statement? Notes. There should be notes. Good. So that's what they're telling us, that why should we know the continuing and discontinuing, recurring and non-recurring. So this is why we are supposed to know them. As reporters, we should know why we are doing that. So we're saying discontinued. Here was discontinued. Discontinued operations are reported separately below income from continuing operations, often with a substantial for income before tax and net income. So it's not going to be in the notes, but it's going to be inside the profit and loss account. Yes. That is in the income statement. That is when we're talking about reporting and presentation in the financial statements. How about in the balance sheet? Assets and liabilities of discontinued operations are classified as held for sale, if applicable, and are presented separately again from continuing operations, even in the what? In the balance sheet. Okay. Cash flow statement, to compare to discontinued operations, are reported separately again to provide clarity on the impact of those operations on the cash flow. So everything that is discontinuing, we are supposed to report separately according to what we are learning today. So these are some of the things that us as reporters have to take note when we are presenting the financial statements in our companies, as we are going to be in big companies where we are going to present the financial statement. Any questions? Yes.
When you talk about those things that are written in the notes, they're there in the notes so that we shouldn't distract the whole statement.
Yes.
Financial reporting.
Yes.
But then, is it wise to put these things inside the statement? Because I just feel like they're going to complicate.
In fact, you remember in the first instance, you and me, we said yes, they should be in the notes.
Yes.
I thought also like that. But when I read in the book that, I thought it's not right. In fact, presentation of financial statements depends on where you are working. The principles are the same, that we should, for example, in the balance sheet, we should start with assets, and in the profit and loss, we should start with revenue. That's the principle. But inside there, you can manipulate it in any way. So far, you are talking about the assets when you are talking about balance sheet and liabilities below. So you can put it in the notes. The understanding is going to be the same. Okay, it can be the same. So yeah, other companies can do that, but even if you put it in notes, it can be exactly behave the same, and the people can understand that it's really what you wanted to to tell them. Yeah.
Like in the example that we saw,
Yes.
they had included continuing operation.
Did they?
Yeah.
Ah.
It was like loss from discontinuing what?
Okay, in the income statement. Okay, let me go back. Discontinued. I'm there. Let's see.
The one we saw on page 43.
33. I can't remember to have. Let me see. Which is this one? I've gone up to revenue. I can't really see them. Have you seen it? No, I've not. Let's continue.
Loss for the year from
Discontinued operations. In the 2017, we didn't have, but in that other year, we had a negative 30,000 something. Is it? Okay. No, here they are telling us that loss for the year for a discontinued operation. Is it? We don't have anything, but only profit for the year from continued operations are there. Oh, discontinued are there? Yes. Yeah, discontinued and continued. So that's why maybe discontinued is in negative.
Yeah, it's being subtracted.
It has been subtracted. By the continuing are positive. No, the continuing, that's profit for the year. It means that's the core business of what? Of this company. That's their amounts that we have found for both the years. But because of those, the loss that was made on a discontinuing operation, that's why it's a negative, subtracting from the profit that was made. Okay, good. So it can either be on the face of the financial statements or on the notes. So we have seen the example of our question or our argument. Sure. So it means now we have done several subtopics in our presentation of financial statements. We started with sustainable earnings, the portion of earnings which are recurring and non-recurring, operating and non-operating, continuing and discontinuing. So we have done with financial statement presentation. Have you seen it? I hope I hope you are going to have the course outline. So we're going to start next week, we're going to start revenue recognition. How, us as reporters, can we recognize revenue? Financial statement, Dorothy Augustus, the one that I gave you previously. Thank you so much. I think this should be the end of our